More now, let's welcome in the former Dallas Fed President, Robert Kaplan. He's now a Goldman Sachs Vice Chairman with me, as you see at Post 9. It's nice to have you on a day like this.
Good to see you.
How tough of a spot is the Fed in now?
They're going to have to balance what is a potential slowing in the economy versus the fact that inflation progress has stalled out and, if anything, may be going a little bit backwards. And so, unlike 2019, I was there when we cut rates in response to tariffs because we're worried about slower growth. Fed's more constrained now. And so they'll have to balance the fact that the inflation job isn't done. And I agree with Steve. I think when you see the SEP, the forecast in March, I think the market will be somewhat disappointed. I would guess the median will be closer to 2 cuts, not 3 or 4.
I mean, you've clearly articulated why they are in the pickle that they may be. Where do they err? Do they err on the side of the economy? Even if they're worried about the impacts that they don't know from inflation, they can't let one get out of hand at the expense of the other. So
one of the things I'd be thinking about, this administration's been in office maybe not even exactly 6 weeks. Between now and the March meeting, I would guess there'll be enough fog that the right answer will clearly be to do nothing. They'll then have a number of weeks to assess what's going on in the economy. There's 4 or 5 structural changes going on at once. That's why the tariff thing is only part of it. You've got government spending cuts. That would slow growth, might be disinflationary. You've got a severe curtailment in immigration. And so slowing workforce growth, that slows growth. You have regulatory reform, but it's on the come. It hasn't happened yet. You've got a change in energy, and then tariffs. And the reason tariffs is such a problem, why I think the market is reacting the way it is, if you're going to have a tariff dispute with China or Europe, that's one thing. But if you're going to domicile manufacturing in the United States, integrated supply chain and logistic relationships with Mexico and Canada is central to being globally competitive. We operate as a North American continent, and I think that's why the market was so surprised by these actions.
I mean, can you bring all of the manufacturing? It sounds like you're addressing this now. Can you bring all of the manufacturing back to this country, like the administration clearly wants to do, with having a longer-term build in inflationary pressures, i.e. prices going up?
So the number one thing a CEO asks when they expand manufacturing is it globally competitive? And the issue is the way U.S. manufacturers have been able to be globally competitive and take share from Asia is using Mexico and Canada to do logistics and supply chains. 40% of the imports from Mexico is U.S. content that's been going back and forth across the border. And that's why if we want to get people to reshore, you need to have Mexico and Canada in order to induce people to reshore. So I think that's a challenge to the argument that this is intended for reshoring.
The idea of tariffs and one-time price increases, like the administration is suggesting, can be transitory. I want to listen to exactly what Secretary Bessent said today here in New York, and then I'd get your reaction, if I could, on the other side.
As we deleverage the government sector, re-leverage the private sector, which we'll talk about later. And look, can tariffs be a one-time price adjustment? Yes. While I've agreed not to talk about prospective Fed policy going forward, I would hope that the failed team transitory could get back together and think that nothing is more transitory than tariffs if it's a one-time price adjustment.
That's the Treasury Secretary earlier this afternoon. What do you say?
So even before these tariffs were put on, inflation progress is going sideways. Let's put it this way. The tariffs certainly don't help to create more inflation progress. They may hurt. He may be right, but the jury's out. And so it may turn out that the government spending cuts help with disinflation and other things, but the tariffs at a minimum, we know they don't help. They may not hurt as much as people fear, but they don't help. And we do know they probably slow growth.